Good evening. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening, as we're here now on Tuesday, the 22nd of October, 2024. The time, well, it doesn't matter. The markets are closed in the evening, so we don't do that. Big news event out of McDonald's broke after the market, and the stock dropped 7 to 10%. And there's an E-Coli breakout. Now, it started off in Colorado and Nebraska, but then on CNBC, the last I heard, it had spread to a number of other states. They don't know it's from the hamburger meat, or if it's from the not the fries, the onions, the sliced onions. Those were the two culprits they were looking at. McDonald's has the ability to shut this off quickly, and I'm assuming they will do that. However, and there's a big however, the damage is done. It takes a few days to know if you've gotten ill from it, and if you do, this can be life-threatening. One person has died, 10 were in the hospital, 49 had caught cases, but I'm sure that number, I'd be happy if that was all that happened. And remember, you have Chipotle to remember when this was happening to them on a regular basis. Stocks don't recover right away from that. People back away. They're not going to eat McDonald's products. I, for one, wouldn't for a little bit. And I just want to be safe and let this get out of everything, and you do it. And no, I don't think that President Trump yesterday serving McDonald's meals is the cause, but I guarantee you somebody's going to come out and say it's his fault and he did it. That's just the way that it goes. Donald, you had a pick yesterday? All right. What can you say there? It's earnings season, and we're getting a little bit of everything. I mean, it's still coming out wild, as you can imagine. And stocks, you see them in the morning, they're up 8, 9%, they're down. Some hit the numbers, they're down. Others aren't as bad as people thought, they're up. It's a lot of everything going on. So please pay attention to that. Understand where you're at. Understand that another thing that's been going on is we're in a never-ending cycle temporarily of interest rates just climbing every day. I don't know where it'll stop. You're back to 4.2% now in the 10-year note, which is, I believe, higher than the day before the Fed cut by 50 basis points in its last meeting. So that whole cut has been wiped out if you look at the markets, and you can see where you're at. And I think things are going to get worse over time on interest rates if countries don't figure out a way to stop spending, especially America. All right, too big of our GDP is now coming to debt. I'm looking at what it costs if you have $100,000 in debt on credit cards at 22%. I mean, that's what you're paying. So got to take this all into account. And, the CPI doesn't use that. It doesn't look to see what interest rate charges are. It doesn't look to see all the insurance you have to buy every month. It doesn't look at things like that. It's set up to look at other parts, and it's those other costs that are taking the money from the Americans at this time. And you need interest rates down even for housing, and you're not getting it. Tomorrow we get a few numbers. We're going to get the mortgage bankers' numbers at 6. I can't imagine they're pretty. I'll be surprised if they are. And existing home sales from National Association of Realtors at 9. Last month we had 3.86. I would look for a bit lower of a number just because rates have been going up. When we look at the stock indices, most finished up, as you can see, other than QQQ, in the red. Your bonds were stable, and so was TLT, so that was impressive, actually. Metals taking off, and if you haven't looked, by the way, if you had looked at my silver report, I think it was pretty timely, though, what was it, a week and a half ago, are you paying attention right now to the dollar report on our website? It's at iraepstein.com. It's the currency report. All you do is go there, look on the top left, you'll see the report. It goes off the board tomorrow. So after tomorrow, you can't see it. My reports are only up for 3 business days. You either look at them or you miss them. It's really that simple. This isn't a history lesson. This is what it's up for. And I'm trying to show that, hey, there's a reason you should be a subscriber, a paid subscriber to our services. Maybe some of the ideas will benefit you. They don't all work out. I'm sure you're aware of that. Nobody walks on water. All right, DWPCF. Again, this represents the performance of the broad U.S. market. And that's what I'm looking for, not small sector, a little bit broader, coming down. This is what government employees are able to invest in. This is one of the funds that they're allowed. And the market is pulling back. The trend is still up, so the pullback, I'm looking for the 18-day average, and that's where I'm thinking this market's going to want to settle in, and that could be where traders start nibbling away at the long side. It wouldn't surprise me. Trend up into the Bollinger Bands. You stayed over it for 3-4 days. You did develop what we call the gorilla glue trade. Then we started backing away from it. Remember I said yesterday we moved to the right-hand side. Then we fell. And now it'd be logical that price and the 18-day average try to make a run at each other. You've also lost the bullish embedded reading. So that again tells me that price in the 18-day average should make a run before you make a new high. I brought up Qualcomm, haven't brought it up in a while, and I thought I'd show it. I think it's interesting. I've been watching with their new, I think they call it Snapdragon chip, and how it's working with Mercedes and other auto manufacturers and what they're bringing to cars. And I was watching the interview, and I'm going, this is a new frontier, and it makes so much sense. I think that you're looking at a market that's been basing out a long time. This could be a very interesting play down the road here now. So I'm waiting for the setups to happen, but I am watching the market to see what it does. In CrowdStrike, the market holding on, trying to go sideways action. We'll see where that carries us. In URA, higher lows, higher highs. Market backing off just a little bit at this point. Not a lot going on there. On K, sorry about the phone, but I can't stop it. It's in another part of the studio. Higher lows, higher highs, and I know that ring. It's my wife trying to get to me. The market coming down here into this oversold area, market just going sideways, but it broke the downtrend. So this part was over. Now to resume it, and it wouldn't be a downtrend, you have to take out the lows of yesterday, Monday, and then you open up the door for the Bollinger Band. Without taking that out, you might be able to climb back to 34.62 to see what's going on. The market is oversold. I don't think you're going to attract new money on the short side, 1, 2, 3. And Toll Brothers, you know, we talked about the market fell back just yesterday to the 18-day average. And if it didn't hold that, then you open the door up for the next support, which is all the way down here, and it went to it. So am I looking for a complete crash of it? I'm not, but even the really rich builders, the ones that are multi-million dollars, million-dollar homes and up, nobody's not susceptible to these interest rates climbing higher. And that's ripping these markets apart. Look at the home builders. They've come down in 2 days. The market's gone from the upper band to the lower. So you're hurting the market with these higher rates as they are. And the question is, what can be done to stop it? In XLF, the financial services, backing off a little bit. You could go here to the 18-day average if tomorrow you lose the embedded reading. You still have an 83 reading, which is good. But if the market closes under 79, be careful. You could get to that 18-day average. In XLI, you are down to that average already. You lost the embedded reading as well. So here is a market that all of a sudden, and sometimes this happens in one day, boom, if this keeps going down, I think I just said this yesterday, I'm looking for this market to then possibly get to that 18-day average, and boy, did it happen. See, you left the uptrend. You left the pattern of higher lows, higher highs, and that's the beauty of the swing line. It helps you understand when that's occurring. On the energy sector, the market's making a stand against the 100, 200-day average and the 18-day average. Can it win it? I don't know. The pattern's not helpful. You have a higher high and lower low, no trend. In GLD, you're running the upper Bollinger Band. It's called the Gorilla Glue trade. It's probably going to make this embed. Embedding occurs when both numbers are sitting there over the 80 level and going sideways. That's happening. SLV, you are up and over the 80 level, overbought, over the upper band. Not much you can do there, and I can't do anything about that sound. That is not my wife, that's my son. I have a different ringtone for them. Higher lows, higher highs. I know what's going on there. Just don't like copper until China does something. Then we get to BND. Now look at This was what I was hoping would hold, the 100-day average. It's not paying attention. That opens the door. Doesn't mean it has to go there, but it certainly opens the door for 73.01, the Bollinger Band down to 72.84. Those numbers will change a little tomorrow, but that's the combination of the 200-day average and the Bollinger Band. So you're just falling apart, and at the same time, the dollar's benefiting from a strong economy, strong interest rates, no sign yet that interest rates are going to drop, and no sign the economy's slowing down. Excuse me there. You're getting a bid in the market. And in FXE, lower highs, lower lows to flip-flop. You could be going back down to 99.20. I do not, for one, see how the ECB cannot just keep cutting for a long time to come. They've got to lift their economies, and the only way to do it is cutting interest rates. Their mandates are not like the United States, where we have a dual mandate. They have a different mandate, and I think they're forced to keep cutting, but we'll see if that's going to be the case. So remember, the dollar report's up. Take a look at everything. I'm Ira Epstein, and I'll talk to you all in the morning. Take care.